On the call this morning, U.S. futures remain flat despite Nike reporting stronger than expected earnings after the bell on Monday. Union protests in Greece pushed gold and silver higher ahead of the Wednesday vote on the hotly debated austerity package. Can markets continue to rebound despite potentially disappointing housing numbers? I'm Alex Steele, and the morning call starts right now.
Good morning. I'm Scott Redler, Chief Strategic Officer with T3Live.com.
And I'm Alex Steele with The Street, and together we bring you the morning call. Scott, happy Tuesday. So the range-bound story continues, right? So rally on Monday. Futures are pretty flat today. No solid direction yet. Still a lot of variables. We get that austerity vote on Wednesday out of Greece. We have 2 days of protests in Athens. What kind of direction can we really expect?
Well, we've been really trying to take this day by day. Yesterday we came in and we talked about, can the S&Ps hold their 200-day moving average? Will they come in and mark up the strong stocks for window dressing? So in the beginning of the day, they tried to pressure the S&Ps below that 200-day. Strong stocks held up, and then the market followed. So if you look at the chart of the S&P, you'll see here, once again, actually I'll show you the spiders. The spiders held this 200-day moving average. We now are in the middle of this lower pivot. Question is, can we get above, just say 128.45, and get back to the upper end of this range for another little move as we go into quarter's end?
Right, and then to that point, then will we see even more window dressing to then hit those levels, like you said? You sort of throw the stocks into the portfolio to show you own them.
Exactly, and then you also want them higher so you can show gains as you go into the quarter's end. So it's a very tricky time because if you also look at the NASDAQ and the Qs,
right,
the strong stocks are coming from the NASDAQ, but if you look at the Qs and what people are so frustrated about, in the last 2 weeks, the Qs have been above the 200-day moving average 5 times and below 5 times. That's a lot of mixed messages,
yeah,
and that's why the shorts are a little worried. The longs can't trust them. And if you look here, this is that action. So right now, it's showing you if this is the 200-day moving average, look how many times red, 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 green, 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 green. But the bottom line is this range is coiling. The question is, can we get a little bit more follow-through to get back to bigger resistance around 56.25.
So then I ask again, what's your trading strategy for that kind of backdrop?
Well, yesterday you had a lot of strong stocks. They worked. They closed near their highs. What traders will do is take some of them home and try and get a few-day move. So I took home some of the key strong stocks from yesterday. They're all opening down a little bit. So I'll see if they could hold higher. And if they can, maybe I'll add as they go through yesterday's highs and see if they could push towards their 50-day moving average, because it seems like most of these stocks that held their 200 are stopping at their 50, and there's still some more room between now and then.
But futures coming in flat, would you be looking to short some specific names that might have more selling for the window dressing?
Well, the weaker ones have been the ones that aren't bouncing, and I wouldn't start selling the stronger ones till we get a little bit closer to the end of the quarter or maybe a few days after, because sometimes you get into a new quarter and then new money has to go to work and they push these key stocks even higher, and that's when the institutions sell to them. So I think you could try